Well, we're already having a full house, it looks like. So I think we can dive in. Thanks everyone for joining. I will introduce myself. My name is Andrea Zinn. I'm the global coordinator for CSAF. And I invite all of you to please introduce yourself in the chat and feel free to ask questions throughout the webinar. We are going to ask participants to keep their video and microphone off and allow the focus to be on the presenters to take the stage. So please feel free to engage through the chat and we'll try to answer as many questions as we can throughout the webinar. So to get started, I'll just briefly present the agenda. Soon we'll be hearing from Ada Dokle from the Center of Financial Inclusion at Axion about the 2021 data from CSAF members. And then after Ada's presentation, we'll jump into a panel which reviews the past, present, and future of CSAF as we celebrate our 10-year anniversary this year. Our panelists today are Brian Milder, the director and co-founder of CSAF, Fallon Casper, the head of debt of agrofinance and food at Incofin, as well as Mauricio Benitez from the responsibility. He's the food system specialist, and Mauricio also sits on our steering committee. So you can submit questions throughout the chat. We will try to answer some during the panel and also have some time at the end to answer any Q&A. So for those of you who are new to the conversation, the Council on Smallholder Agriculture Finance is an alliance of lending institutions and field bidding partners. We were founded in 2012, and we come together to share learning around 3 sets of goals that we're promoting. So first and foremost, market growth in the agriculture SME finance sector. And this includes private institutions, private enterprises who are purchasing and off-taking from smallholder farmers, as well as producer organizations and producer associations and cooperatives. Secondly, we're promoting responsible lending practices and social environmental standards for this market as we grow. And thirdly, we promote a stronger ecosystem. So that addresses how the agriculture SME finance fits into the broader movement around financing a more inclusive and sustainable agriculture finance sector. And we are now counting 17 members and affiliates and growing. And in 2021, we welcomed Eco Tierra as our newest our newest affiliate. And myself, Brian Milder, and our colleague Liz Cottle sit on a team that provides support. We also look for guidance from our steering committee, which includes 3 representatives from Global Partnerships, Alterthene, and Responsibility. And most of all, this is a practitioner-led group, so it's really driven by the goals and the direction of members. So for example, this year, we organized trainings for CSAF member field staff on coffee price risk management and gender lens investing. Some of the other activities that we've engaged in the past year include sponsoring one-on-one technical assistance for CSAF members around gender lens investing, as well as hosting technical sessions. And this past year, we signed an MOU on collaborating during loan rescheduling and restructuring for shared borrowers. And in June of this year, we were able to convene in person for the first time since before COVID. And I think I can speak on behalf of all of the members and affiliates that it was great to be back together and rejuvenate that atmosphere of collaboration in person. And at the June convening, we also welcomed field building partners. It was the first time that we were able to gather with field building partners in person. And this group is a group of institutions that are aligned with the goals of CSAF to promote a more inclusive and sustainable agriculture finance sector. And it's also the support of the field building partners that ensures that the data and insights presented soon by Ada, as well as in the annual report and publicly available on our website, remain available free of charge. So this year, we welcome 2 new field building partners, USAID Feed the Future and Argidius, and we're very excited to have both of them on board alongside our 9 other institutions. So following the June event, we couldn't help but to celebrate the 10-year anniversary of CSAF. So we actually gathered 60 attendees from different stakeholder groups in Zeist in the Netherlands. So this is not only the home of one of our founding members, Tritos, but also the site of the first dinner 10 years ago that really spurred the idea of CSAF. And this was a great opportunity to hear from different sector stakeholders, discuss some of the challenges and opportunities in the agriculture SME finance sector. And we touched on topics like climate finance, serving small, higher impact enterprises, and also how to kind of like build evidence around the links between catalytic capital, agriculture SME lending, and improving livelihoods and environmental outcomes. So that last topic is part of a larger CSAF evidence building initiative that we're doing in partnership with SAFIN and the International Growth Center at LSE. And we'll look forward to sharing some of those findings later this year. So before I pass it off to Ada, I did want to just touch on some of our big impact numbers coming out of the 2021 data. In 2021, CSAF members collectively dispersed over $750 million to 641 businesses, and those businesses represent 2.5 million farmers. So since we first began collecting data in 2013 across 9 years of data, that now accounts to over 5.5 billion in disbursements. And some of the more specific trends in 2021, we recovered from the 2020 dip. So there was a dip in 2020. If you want to jump to the next slide. Not only did members recover the pre-pandemic level of portfolios, but actually increased disbursements and reached the highest disbursement levels since CSAF first began tracking data. The second trend is that the overall number of borrowers actually dropped slightly. So this represents a lower growth in new client origination and also represents a retention of existing clients. So most of the growth in disbursements was driven by amplified support for growing businesses that were previous borrowers of CSAF members. And thirdly, 2021 continued to be a year of risk. There were still a lot of pandemic disruptions, supply chain delays, rising costs of inputs and supplies, and CSAF members managed and continue to manage these risks while also accompanying the growth of borrowers. So without further ado, I will pass things over to Ada Dokle, who will present some of the results from the 2021 data.
Thanks, Andrea. So the 10-year anniversary of CSAF marks also 9 years of data collected from the CSAF members, which I think is impressive. So let's use this opportunity to turn to data and see what some of the key trends and insights from the portfolio are. Andrea already mentioned some of the headlines in 2021, which I'll briefly touch. Like collective lending was $756 million, the highest level in the past 9 years, reaching 641 agricultural businesses, which ranged from farmer cooperatives to private enterprises across 59 countries. And these borrowers aggregate 2.5 million smallholder farmers, about 31% of whom are women. So let's go into more details in the next slide and see what happened in terms of disbursements. So the left-hand side chart shows you that after contracting in 2020 because of the first year of the COVID-19 pandemic, the CSAF disbursements increased by 35% in 2021, which is, as I said, the highest level in the 9 years of data that we have. Disbursements increased in 4 regions, with Sub-Saharan Africa experiencing the greatest growth. They grew by 47% in 2021. This growth, of course, comes after the region experienced the largest contraction in 2020. For 5 years in a row, Africa remained the leading region in the portfolio in terms of disbursements, accounting for 36% of the 2021 overall lending. This increase in 2021 primarily came from commodities like cocoa and coffee in countries like Cote d'Ivoire. The next region to look at is South America. Disbursements in 2021 increased by 40% in South America after several years of decline. Despite this considerable jump in disbursements in 2021, you still see that the disbursement level did not reach the peak value of 2015. Disbursements increased in two top countries in the region, which are Peru and Colombia, indicating in a way that the increase comes primarily from coffee. Peru continued to be the most significant country, not only in the region, but in the CSAF portfolio. It accounts for 19% of the disbursements and 34% of the borrowers. Next is Central America, which increased in terms of disbursements, but 27% after a few years of decline and increase. And this is the highest level of disbursements they have reached so far. In this region, coffee accounts for over 90% of the total 2021 lending. And coffee disbursements only in this region increased by 32%. You'll see that there is lending to other regions, which is just the grape it accounts for only a small portion of the CSAF portfolio. Is less than 1%, which decreased by 56% in 2021. And this comes from just some decreases in countries like Egypt and Georgia. Overall, we still see a concentration in disbursements in top 5 countries, which 4 of them have been stable over the years: Peru, Cote d'Ivoire, Nicaragua, Honduras. The 5th one is Guatemala, which has replaced Costa Rica from 2020. In the next slide, we'll see the analysis by commodity, but I think I have already hinted to some of the big trends here. There is an overall increase in lending, primarily coming from coffee. Coffee disbursements increased in 2021 by 119 million in absolute terms, but this accounts for 60% of the whole 2021 growth in disbursements. For the second year in a row, we see that coffee disbursements surpass the disbursements to all other non-coffee commodities. And coffee remains the most financed value chain, but it reached a second highest level in terms of share of disbursements. You see it is 55% in 2021. 2 things worth highlighting here is that in terms of regional disbursements, coffee disbursements increased in 3 main regions, with South America leading the growth. In terms of loan sizes, the increase in coffee lending in the past year came primarily through loans that were bigger than $1 million. The second most financed commodity you see from the chart is cocoa. Cocoa disbursements in 2021 increased by 36% and were primarily driven by an increase in Cote d'Ivoire and Ghana. You see that in the past 2 years, the share of cocoa disbursements continued to be 18%, while the number of clients dropped. This indicates that a group of borrowers is being financed by larger loans. Disbursements to the third most financed commodity group, nuts, which in this chart are presented by the cashew nuts, dropped in 2021. And this drop is exactly coming mainly due to a decline in cashew nuts in Cote d'Ivoire. Lending to other commodities remains small, and if we look at it by region, overall Sub-Saharan Africa remains the most diverse region in terms of commodity finance. Next is the analysis on number of borrowers. While we saw an overall positive story in terms of disbursements, in 2021, we see that the number of borrowers declined, reaching 641 borrowers. This is down from 654 in 2020. You'll see that there is a general decline in terms of borrowers that has happened for a few years in a row, because some clients repaid their loans, some were not refinanced, or some had difficulties repaying them. CSAF members continue to focus their lending on existing borrowers, and for a few years, this share has been 90% of the businesses in the portfolio. Actually, the figure contrasts with existing clients, representing 56% of clients in 2003, where members were just growing rapidly their portfolios until value reached 90% for existing clients in 2017, and disbursements began to plateau. So it has remained at that level until 2017. Members focusing on existing clients primarily came from the pandemic, from the increase in commodity prices, but also as a reflection of barriers and challenges to serve new borrowers. As a result, or confirming the focus on supporting existing clients, the retention rate was 83% in 2021, which was a similar level to the prior years. 2021 confirmed that Sub-Saharan Africa experienced a larger churn in borrowers, while Central America showed more stability. Of course, we cannot conclude this snapshot of data and insights without talking about risk. The next slide shows that the overall portfolio risk actually declined from 8.1% in 2020 to 7.4% in 2021, as CSAF members worked with more mature businesses through larger loans. However, in 2021, we saw that the write-off outstanding has remained high. The experience when it comes to risk differs across loan sizes and regions. Part 30, as expected, probably to smaller loans almost doubled in 2021, while for bigger loans higher than $1 million, they declined. Portfolio quality improved for Central and South America and South and East Asia, but it declined a bit for Sub-Saharan Africa. I already mentioned that outstanding write-offs remained at a high level. It actually declines to 6%, down from 8% in the prior year, but it's still higher than before 2019 levels, which were 1% to 2%, which is an indication that all loans are being written off by the members. We already know that lending to agriculture SME in low and middle income countries is risky. And when we ask several CSAF members to indicate reasons for loan delinquencies, for several years in a row, they tend to highlight factors that are specific to enterprises, such as management capacity or misuse of fund. But they also emphasize that these challenges are amplified by uncertainties and volatility in operating environment, particularly related to climate, market, and political factors. As I wrap up this short data and insight snapshot, I want to call out that everything we shared today, the charts and the insights and much more, is available for you and the broader public on the CSAF Open Data Portal. This portal allows you to explore the same topics that we covered today, but in greater detail, and it allows you to interact with the data and drill down by the topic of your choice. Thank you very much, and back to you, Andrea.
Thanks, Ada. As Ada mentioned, a lot of much deeper analysis is available on the portal, and also in the annual report this year, we have more of a narrative on some of those insights. So we can share links to that in the chat. And if you have specific questions for Ada, feel free to share those in the chat. We'll try to answer some of them directly or later at the end of the webinar. So we'll jump into our panel. We're really excited to bring 3 panelists together today. First, we have Fallon Casper from Incofin, Mauricio Benetes from Responsibility, and Brian Milder from CSAF. So we want to first focus on the theme of the webinar. So it's CSAF, past, present, and future. We're celebrating 10 years of CSAF, and a lot has changed over the past decade. So we have a timeline on the next slide, and there's a more robust version of this in the report, but you can see that CSAF was launched in 2012. This first conversation happened in Zeist in the Netherlands, and then later there was the first meeting of CSAF members in Newcastle, England. And I want to invite our panelists to turn on their cameras, and I think specifically Brian, who was there at the beginning of CSAF, can tell us a little bit more about what the state of the agriculture finance sector was like before CSAF got first started in 2012. And then what were some of the original conversations that really spurred CSAF to be founded?
Thanks, Andrea. Hello, everyone. So I think just from my perspective, characterizing the sector in 2012, I would say nascent, fragmented, and off the radar. So nascent in terms of the tools and practices that lenders used around due diligence, around risk management, operations, legal compliance, and also talent. When we were trying to hire loan officers, we would usually get candidates that had come from the microfinance sector. There weren't that many people that had experience doing agri-lending. The state of the sector is very different in each of those areas today. In terms of fragmented, we saw each other, those lenders that were active back then at trade shows. Occasionally, we would bump into each other in the field. We would occasionally be co-lending to the same borrowers, but we weren't coordinated at all. And that created risks and also missed opportunities. And then third, off the radar, impact investing was really taking off around 2012. I think much of that conversation was around microfinance, renewable energy, other sectors, and there wasn't the attention to food and agriculture or climate, certainly climate adaptation, that there is today among donors, development finance institutions, policymakers. So that was the, I think, state of the sector. And then Andrea also asked about the impetus for coming together. So one was looking at what was happening in the microfinance sector. In 2011, there was the crisis in Andhra Pradesh, India, crowding in of capital, overlending. There was a lot of borrower defaults, some very highly public suicides on the part of borrowers, financial institutions going through difficult times, and public sector backlash. And so we were observing that and thinking about our growing sector, recognizing that there was also more capital flowing in to agriculture, albeit at a much earlier stage, and thinking about how to preempt some of the challenges that the microfinance sector was facing at the time. The other was simply recognizing that we were each making it up as we went, and we didn't really know what we were doing. And we felt like there was a good opportunity to learn from each other. And so when we came together, it was very much focused on lending practitioners. There were other groups around the same time that brought together a wider range of stakeholders, but we didn't feel like there was a forum to have these more technical conversations about responsible lending practices, about impact, environmental social governance standards, et cetera. So the vision was, how do we grow the market? How do we do so in a responsible and high impact way? Yeah, I'll stop there.
Thanks, Brian. Mauricio, you also were able to jump into CSAF as early as 2013 in some of those early meetings. So I'm also curious to get your vantage point on what the sector was like when you first got involved.
Thanks, Andrea. And again, well, hello, everyone. I'm very happy that we have so many participants that want to hear our experience for the past 10 years. Yes, when I joined CSAF in 2013, and when Brian mentioned this, as probably many of us, I was leading microfinance. Actually, I was part of our microfinance portfolio responsibility, which by then it was a very established industry. 5 years after Muhammad Yunus got his Nobel Prize. So under my belt, I had already some very big workout cases in Nicaragua. We have suffered actually before India, some crisis in Nicaragua, in Bosnia, and some certain rules were established in the microfinance industry, and lending principles were a common language, and certain parameters were very common for risk management, lending practices, but also workouts. Comparatively, agri-SME lending as a sector was just starting. And you could really tell that. But also we were all just starting. Responsibility got serious about agri-SME only in 2011. And as we grew, I mean, back then, I think we learned a lot and we managed to share a lot of experiences. So yeah, well, my vantage point is that, yeah, coming from microfinance, I could really see how we can really shape up a sector and bring these practices, adapt them, but particularly develop our new ones and commonly just share very strong principles. And we were really anchored about impact. I will say we were really more focused on impact than microfinance. And it was a very, very unique group that we were very happy to really start together.
Thanks, Mauricio. And that's a little bit how we got started, but then a lot has happened in the last 10 years. So when we're looking at like the present collaboration of CSAF, could you kind of share more to the audience about what that looks like from a lender perspective?
Yeah, definitely. I mean, I can only say that, yeah, in many ways, I mean, looking back, we have become as professional now and as established as how I remember how was microfinance again back then. Our CSAF annual convenings really pushed us to improve to collectively regarding credit risk management in particular, to become, let's say, more professional, quote unquote. We had developed a very unique way of impact reporting that you can see that throughout our CSAF reports. And that's quite a legacy for the industry, and particularly pushed us to grow healthy our portfolio. So I will say this, persevering entrepreneurs went through different commodity cycles. I would say we are more seasoned now, and we become not just investment professionals, I would say. And some of us, you could say we were enthusiastic pioneers. Now we can quote some impact leaders. And that's how I see that we have become more established. And now we can really show, as Eda showed, homogeneous financial and impact data that is a contribution again to the industry and is verified. So now I was saying our workouts, we have our principles, we have these lending principles that are out there for anyone to adhere now. And now we have launched a new product, and it was very interesting how one of our investors pushed us and say, you should adhere to the CSAF lending principles. And we said, well actually we're founding members and we created those principles. Yes, but we are very happy that you mentioned that those are the principles that we should adhere to for a new fund. So I'm very happy where we are today.
That's great to hear. Thanks, Mauricio. And I mean, Brian, hearing Mauricio's answer, would you say that CSAF has become what CSAF has become today reflects that original vision, or do you think that vision has evolved over the last 10 years?
I think both. Certainly in terms of creating a forum for practitioners to come together, learn from each other, and also contribute to the development of the sector around standards and best practices, absolutely. It hasn't been easy. It takes a lot of time to align different actors around a common vision. I think one of the things that we've done most effectively is build those relationships over the years. And so I think that is true to the original vision. There are a couple ways in which we couldn't have anticipated. One is the idea that started in CSAF about 5 years ago and is now spun out, which is Aceli Africa and potentially Aceli Americas, which is around a market incentive mechanism to try to address some of the risk return barriers to serving this sector in a financially sustainable way. I think that goes beyond the practitioner learning and sharing, and for good reason now exists outside of CSAF, but just in terms of CSAF playing a catalytic role there. And then the other has been really interesting, this evolution in the last couple of years, to add field building partners and to go beyond the more internal discussion among lending practitioners to try to engage a wider range of actors that are coming at this sector with different perspectives, as donors, as investors, as research entities, et cetera, and recognizing that CSAF has an ambition to contribute to sector development, and to do that, we need to engage other stakeholders. And there's so much more we could be doing in that area, and something we're actively thinking about.
Yeah, we were able to gather some of those stakeholders together at the June. We had the June convening with members and affiliates and field building partners, and then the larger 10-year event with a wider group of stakeholders. And I think that we see at CSAF as that is hopefully the beginning of a larger engagement with sector stakeholders. And for me personally, I was so excited to meet everyone in person for the first time. I feel like everyone going back to these in-person events after that gap from COVID has that shared vision of there's nothing to replace in-person connection. And Mauricio, I know you touched a little bit on some of the professionalization and practical aspects of CSAF, but coming out of those June convenings, what would you say about how the in-person meetings kind of differ from that technical collaboration that takes place throughout the year?
Yeah, well, I can always say that in-person meetings are always better, and you can exchange, and you have this. You miss that. I mean, that I can only emphasize and probably go about 10 minutes how important that was for us at the beginning and during all these past years. But I think what we missed the most was this informal in-person exchange that happens mainly during the first day of our convenings, where we normally start with a very open and transparent, let's say, portfolio update that we detail aspects like growth during the past year, portfolio risk, accomplishment, challenges, and let's say opportunities. And this is probably not very usual for competitors to do so, and that's probably also unique to CSAF. But it really helped us not only to build knowledge about the market, but also build this trust amongst institutions and particularly people. So after this open discussion, transparent, I mean, in confidence, of course, then we normally move to our beloved, initially called and then later coined bumps and bruises. That there we collect and share about problem cases. I mean that we encounter in our portfolio that is normally shared for more than one institution, and that can become very heated. We had very interesting exchanges because yes, there are problem cases, but I think it was only through this type of discussion that again is more than beyond the drinks. It's that really help us to shape our principles, how we see lending, and how we really ended up with, for example, the workout principles is just through this exchange. It's informal, but it's transparent. I will say very healthy, and probably the basis of what we're now showing. And it's because it really helped us to just be generous with the information that we can give to everybody beyond the group as well.
Thanks, Mauricio. I would love to bring Fallon into the conversation as well. And Fallon, you also attended these June meetings as a global rep. And I think you have a particularly unique perspective because you also represented CSAF at the regional level before joining at the global level. And I would love to hear if you could kind of speak to what that collaboration looks like in the field at the regional level in comparison to some of this collaboration more globally.
Sure. Thanks, Andrea. And it's very nice to be here with all of you, and thank you for inviting me. I think CSAF is great in that it seeks to include different voices at different levels, and certainly at the regional level, there is a sense of shared understanding and a type of basis of understanding of the shared principles and responsible lending that allows us to collaborate in a manner that increases the professionalism, I would say, not only of our sector and of our professionals, but also of our clients. in connecting with each other and aligning on reporting requirements, on covenants, on how our investees should report, should conduct their business, in our monitoring practices on a monthly or quarterly or yearly basis. Aligning in terms of standards is something that helps us also raise the level of our investees in terms of how they understand their own operations and finance, governance, etc. So that's an important piece, as well as just general alignment on market movements. General collaboration when there may be workouts is often a key point of collaboration, but in general, even just aligning on where the market is something that really helps to standardize and improve the way in which we interact with each other and raises our professionalism across the board.
Thanks, Valen. And I feel like these answers that Valen and Mauricio just shared really give a good sort of snapshot on what CSAF looks like presently. When we're looking ahead at the future of CSAF, coming out of those June meetings, some of the sort of lending trends that members discuss as we look ahead are that, yes, overall lenders recuperated their pre-pandemic portfolios, increased portfolios overall. And I think generally lenders have been really impressed with client resilience throughout 2020 and now 2021 to navigate some of the post-pandemic, not post, but current and post-pandemic challenges. And at the same time, there's definitely been a feeling of this mounting risk. So there's some risks that have become more obvious and more apparent in agriculture, and those continue to feel really daunting in many ways. And I think members are sort of bracing for that risk. And on top of that, we're recognizing the urgency of climate finance and how CSAF members can really innovate and expand their portfolios to have a stronger climate finance approach. And coming out of those June meetings, feeling that bracing for risk sentiment, I'm wondering if Valen, maybe you can speak more to some of the challenges and specifically some of the risk that the agriculture SME sector is facing right now.
Yeah, absolutely. It's certainly not an easy time for our investees across the board, and we've seen that 2020 was a year where many of us kind of took a pause, but 21 evolved into a very risky year with climate disruptions, the coffee industry that had a significant price shocks, logistics costs that were more than double, sometimes 3 times the previous year's costs. Inputs, war, I mean, you name it. We're in a really challenging environment. And part of that, I think, also goes back to, if you look at Ada's presentation, we certainly increase the lending, but we increase more to our existing investees and less to newer clients, which reflects a bit that risk perception. It's unlikely to change in the very short term, although there does seem to be some stabilization, at least in terms of logistics, starting to return a little bit to lower levels. And I think it also represents an opportunity, more so than thinking about the risks, because certainly risks have always been there. And maybe 10 years ago, those risks are different this year, or 10 years later, there are different risks, but there's a potential for opportunity here in terms of shifting some of these things by collaborating better, by moving towards greater information sharing. When we look at fertilizer costs and how high they are, maybe there's an opportunity for organic production and shifting some of those inputs to other things. So there's always a silver lining, I think, in looking at risk, and it's beholden to us as impact investors to really see how we can support our clients. They have been incredibly resilient, and there are support mechanisms that we can put in place by extending sometimes maturity dates or just different ways that we can really tackle offsetting the risk. So certainly offsetting is important, and also seeing how we can shift that into an opportunity.
Thanks. I think that really speaks to sort of the role that some of the individual members can play. If we kind of take a step back, where would you say is like the future role of CSAF in addressing some of those risks?
Yeah, certainly CSAF is really well poised for a lot of the de-risking mechanisms. So the responsible lending principles are our first start, and they allow us to speak a common language across lenders that enable us to collaborate. We have last year kind of fine-tuned an MOU on workouts that helps guide a bit some of these problem cases in terms of collaborating among lenders. And it's at a point now, I think, where CSAF is mature enough to really help guide a lot of thought leadership as well. Well poised to collect data and then also take positions on where the industry is going, on helping guide us with for example, some of these expert talks that CSAF has hosted over the past few months that help us really deepen our understanding on a technical level, on an expert level, of really difficult challenges that our sector is facing. We also collaborate as syndicates, so we do syndicated loans. And at the very minimum, checking with our peers, our lender peers, on where an investee is, sometimes aligning on different covenants that they need to report on. All of these things help, on the one hand, to de-risk, and on the other hand, improve the quality of these clients in the future. There was a question that I saw in the chat about how we can increase investments to scale. Well, a lot of that has to do with de-risking, because many of our investees in the emerging markets have information asymmetries. So being able to offset that, I think, is a really important part of CSAF, having this, umbrella position that enables the group to see the market as a whole and then identify where there are potentials for plugging in gaps. So yeah.
Thanks. And yeah, there was a question there's a bunch of questions that have come into the chat, so maybe we can try to address some of them. I see that Todd Farrington asked about the views of CSAF members on sort of the evolution of instruments and structures that have proven useful in agriculture SME finance. Valen just mentioned some of those syndications and expanding maturity or the maturity of the loan in order to address and manage risks better. I wonder if Mauricio, can you add to that to answer the question, either about how these evolution of instruments address risks, or maybe are just more useful in other aspects of SME finance?
Yeah, no, hi Todd, great to hear from you. There's a balance between secured and unsecured instruments here. So we want to really attach a lot of local documentation to your loans, that's different to microfinance. And you want to have some recourse, so you can do loans and have some protection on the downside, but still they are relatively unsecured in the sense that it's difficult to get hold of real assets that can be liquidated. So the instruments that they work best are the ones that they have a local documentation, but they still rely on future cash flow for repayment, and that's with triangulation of sale contracts, or ultimately with undertaking agreement with a buyer. But yes, it's a normal corporate lending, so in general you can do subordinated and so on. But yes, it's a fine line between the risks that you can take and what you can really take as collateral.
Thanks, Mauricio, for adding on to that. I see another question from Stella Chuku. She asked, what are the thoughts among CSAF members to start harmonizing on how we see risks and monitoring them? Either on, for example, financial and social covenants. Stella mentions that these have potential to reduce costs for those CSAF members and our clients. I think that I've heard, Valen, I've heard you address a little bit around this topic in the past about sort of joint risk monitoring. Do you think you could speak more to answer Stella's question?
Yeah, absolutely. One of the things that CSAF has done, in my opinion, quite well is a standardization of monitoring and reporting on impact and operational metrics. So on a monthly basis, many of our clients report some operating metrics such as exports, shipments, cash flow, contracts, payments, and this tool is a tool that has been standardized by CSAF that enables a client not to report in 5 different tools, but in one centralized tool. That was something that was developed a few years ago and has been refined over time. The other thing that CSAF has done is create an impact working group that started with standardization of social indicators and last year standardization of environmental metrics. These are voluntary to adopt by CSAF members, but it enables us to continue to build into a standardization of our sector because a lot of what we do is informal, you know, an industry that's really still becoming an industry. This formalization helps us to harmonize, as you mentioned, those risks, those covenants, and really speak a similar language. You know, when we talk about how do you define a smallholder, maybe that's a pretty easy question, but how do you define or how do you measure water utilization or greenhouse gas emissions? It sometimes becomes a bit trickier. So aligning around definitions is the first step to aligning on monitoring them and then eventually doing something about them, both on the positive side and on the negative side in terms of the ESG and impact.
Yeah, that makes a lot of, that's one of my favorite parts of CSAF as well. I think it just makes sense to collaborate at that level. We have another question from Songbei Lee about what is the longer term goal or vision of CSAF, you know, for example, system change versus growth. I would love to hear Mauricio speak to this, and then maybe Brian can add on as well.
Yes, Songbei, I think it's a very important question. You say, what if you, you know, put yourselves out of, let's say, business or out of job by just providing the lead for banks to take over. I think that's the goal, honestly. We enter with this additional, and yeah, a classical example of ours is that we start with a small, relatively small loan, and we grow, and eventually the banks take over. And so that's why we believe that also this sector is very tough and is risky. So if our responsibility, we don't make much money out of this. Actually, it's cross-subsidized most of the time by microfinance and energy. So we believe that this is a very impactful and nice portfolio, but it will not grow to billions. It's something that we know that it will be a niche for impact investing, and it will be catalyzing probably local banks. That will be the goal. And that's why also our responsibility, we're developing adjacent or new funds that are, let's say, tackling long-term investments, a bit larger. It's a missing middle between you know, SMEs and DFIs lending, and also it's a more climate adaptation and is transforming food systems. So yes, just to say that, yeah, it will be very difficult to scale up what we do as CSAF. Brian, probably want to complement.
Yeah, thanks, Mauricio. I agree with all that. And I would just add, years ago, at least when I was with Root Capital, we had the vision that we would demonstrate and then graduate borrowers and eventually the whole portfolio to local lenders. I think it's been much more nuanced than that, where we see that the larger borrowers start to build up their asset base and they're able to get loans from commercial banks, but usually those are secured with a certain amount of collateral. And the businesses still have substantial working capital needs on top of that. And so CSAF members play an important role lending with either unsecured or with less collateral than banks would require. And so there's this continued need in many cases for CSAF members, or at least non-traditional lenders in this market. One of the things that on the Aceli side we've been looking at are how central bank regulations really constrain bank lending, affect their collateral policies, and make it difficult for them to serve the sector. So I think we would maybe broaden the definition from catalyzing lending by local commercial banks to a more vibrant lending ecosystem that includes specialized lenders that do factoring and equipment leasing, et cetera. And that's also what we see in more developed financial markets. It's not just commercial banks.
Thanks, Brian, for that compliment. I see, we'll try to get one or two more questions in before we have to close. Thanks everyone for sending so many great questions. There was a question from Manuel Bueno about the hearing from panelists around how macro trends might affect their business, including, for example, higher global interest rates, inflation, disruption in egg value chains. Hoping that maybe Valen, you could speak to this, and then Mauricio can add on as well.
Yeah, I mean, there's certainly changing dynamics that also impact a little bit how we see the market evolving. I see, for example, that there's countries that we weren't able to do business in before, that given the shifting interest rate tendencies can kind of open up for us to be able to enter those markets. So that's an interesting turn. At the same time, the cost of funding is going up across the board, and even for us at the investor side, it also means that our investors also have higher potential returns, which, you know, when you have an impact first fund or when you have low returns, makes it that much more challenging to continue to fundraise. So it's both at the investee level in terms of shifting a little bit those markets and seeing where we can enter, which creates opportunities. It also creates challenges for our investees in for them generating higher cost of debt, and for us is with funds that we're fundraising, increasing those costs. And in what I mentioned earlier, both of these things generate not only risks, of course, but also opportunities. So it's a shifting market, and it's very dynamic, and in that dynamism creates a lot of potential for changes. It's hard to say right now what those changes might be, but for sure we're seeing a shift in dynamics in global agriculture.
Yeah, very little that I could add, but I will emphasize risks, yes, that we are very much anticipating a difficult year. So that's inflation, and particularly interest rates, we see how our investees tend to see fixed rates as a norm, where it's very difficult to pass on a 200, 300 basis increase on the cost of funds, and that will be only gradual, and also will not probably compensate for the additional risks that are coming, particularly from supply chains and from the general feeling that a recession is coming that will disrupt more these value chains as we try to anticipate price risks as well. So it will be turbulent, but I think these type of forums and the regular exchange is what improves the how we can anticipate them or manage these risks.
Yeah, I would say that we all agree that risk is a constant theme in agriculture SME finance, and that's often paired with lower returns. And there was a question, as Fallon mentioned in the chat, about, you know, given that high risk, lower return profile, how can these challenges be overcome to increase investments at scale? And Fallon, I'm wondering if you could speak briefly to your experience with Aceli in how we address that low return, high risk profile.
Yeah, I mean, in general, I do think that there's a really strong case for blended finance here and for de-risking mechanisms, and Aceli is certainly one of them. The presence that Aceli has in these 4 countries in Africa is a really important start, and I do hope that Aceli can continue to expand across further countries in Africa to kind of deepen its reach. De-risking mechanisms function as an incentive for lenders like Incofin to be able to invest in otherwise entities that we wouldn't necessarily invest in. At the same time, and maybe addressing this last question, default rates are for sure going up. We saw, for example, that PAR in the presentation that Ada shared with us has gone down in 2021. I'd be curious to see how that evolves in 22, because I think that there's still a lag in defaulting that we haven't yet seen. And that also shifts a bit where we have our focus and how we can continue to de-risk. So for sure, entities like Aceli are key. I'd love to see it expand, and I'd love to see it deepen its capacity to really de-risk. First loss guarantees are incredibly important, as are some other de-risking mechanisms. For example, to lend in local currency right now is really difficult due to the hedging costs. Some might even say prohibitive because of the hedging costs. So things that could de-risk these types of investments enable us to deepen our capacity for investing in high risk areas, but it's not enough, and I don't think it'll be enough in the short term.
Yeah, and I think that was reflected in this year's data. We did have a lower par, but write-offs increased, so that shows that there's a lot more information on this in the report, which I invite people to read again. But risk is not always as black and white as it can appear, even in the data. And so this is a continuing challenge for CSAF members to address. So I think we're soon heading towards close. I did want to give Mauricio a chance. I know Fallon spoke a little bit to the future role of CSAF, and I would also invite Mauricio to kind of add your vision on the future outlook of CSAF and the agriculture lending sector.
No, thanks. I think the tone of the questions are probably an indication of how we see that the future is shaping. Again, this is a very difficult sector. It's costly, I said already, and it's not for the faint heart. And it's how we see it is that it's still very impactful, and it's needed. So the more that we advance this sector and we grow together, the better. So we learn every passing year, and we add new affiliates and people that can contribute a lot to the discussion with their experience. We're still concentrated in certain value chains and certain export commodities, and predominantly working capital. So there's a lot to expand. So whilst we see that, again, it's nothing that you can really scale up to the billions, it's something that can incubate things like Aceli, and it can really support best practices in this very important sector. But also we, as responsibility at least, we see the growth in new streams, like our new Climate Smart Food Systems Fund, that is, again, not, it's based on food and agri-SMEs, but it's really expanding to longer term, a bit larger. So it's loans that really target climate KPIs and renewing our late concern that it has to be what we do within planetary boundaries. So yes, there's growth to come, and there's more to add, but the general consensus is that yes, this is a difficult sector, and probably we shouldn't expect really ballooning, let's say, or a scale. But yes, more people involved in collaborating.
Thanks, Mauricio. I think that's a great note to end on, especially just reiterating that CSAF members are here foremost for the impact that is generated through agriculture SME finance. You know, it's not an easy sector to be in, and we're here because of the impact mission. So I'm really grateful that everyone could join this panel today. I want to give people a minute to recover before the top of the hour, but it's been great to have the panelists here. Thank you for joining, and also thank you for all of the questions from the participants in this engagement. I'm sorry we couldn't get to all of them today, but hopefully you were able to get what you were looking for out of this panel. So thanks everyone. Thanks to the panelists. Thank you also to Ada for the data presentation. And again, I invite everyone to look further into the data at the Open Data portal, which is on our website, as well as in this year's annual report. And we'll look forward to connecting later this year and sharing some results from our evidence initiative.
Thanks, Andrea, for your facilitation.
My pleasure.